Welcome to the 7-Minute Takeover, and specifically the subsegment Deal Decode, where we break down deals based on the limited information you may start with on an online listing or from initial information from a broker. I'm Eamonn with my co-host Rob, ready to spark some insights. Speed to a decision is a key muscle to build, and we're here to help you think about how to get there quickly. Rob, welcome today.
Hi, everybody. Eamonn. Today, we're looking at a listing from the Village Wealth platform. It's a $2 million vape shop in Toronto, selling it just under 4 times SDE multiple. Let's dive in and figure out if this is an opportunity we want to jump on.
Solid plan, Rob. A 4 times multiple suggests about 500,000 in SDE, but we need to clear the haze. We'll start with a SWOT analysis of Toronto's vape shop scene, then hit key questions we'd ask the broker to get to the meat of the deal. So the SWOT analysis is what we'll typically do to start organizing our thoughts in terms of whether this is a deal we should pursue or not. So strengths first. The vape industry has juice. Global markets projected to hit 183 billion by 2030 with a 30.5% CAGR. Toronto's urban young are perfect for vape shops looking to expand their customer base. A well-run shop can lock in loyal customers with premium products and expert staff.
Oh, totally. I mean, prime locations like Yonge Street or Kensington Market can pull in serious foot traffic. Plus, you've got recurring revenue from customers hooked on this stuff who keep coming back for refills and other accessories.
Yeah, now the weaknesses, the number one's got to be regulation on this front. They can really shut down your operations in a hurry if laws change on what can be sold in Ontario. The Smoke-Free Ontario Act bans sales to under 19s and requires tight ID checks, which means compliance costs. Smaller shops may struggle with inventory costs. You got to have it there for when they want it. And high-end products can price out budget vapors. Competition is ripe with 7,400 vape shops in Ontario. And you got to imagine at least half of those are in the GTA.
Yeah, I mean, physical shops rely so much on local traffic. It does follow sort of the convenience store model where proximity and region is critical. If your spot's hot, great. If you're not, you're toast. Online giants like Dash Vapes are also eating into retail with free shipping and bigger selections.
Yeah. The opportunities next, if you've got the right location, people are going to walk down when they've run out of their juice and need a refill, or tourists are going to hit it if they can't benefit from delivery services when they're staying in from out of town. So Toronto's young crowd is a gold mine. You could expand with new storefronts or online through innovative product lines. Herbal vaporizers are trending, apparently, and subscription boxes for e-liquids could lock in some pretty steady cash flow.
Herbal vaporizers, I like that. That's interesting. The threats are real, though. Canada's tightening rules on flavors and nicotine strength could gut product lines. Public health campaigns, obviously, they're always resisting this growth and making it less trendy. And as you said, competition is fierce. And there are smoke shops from Toronto Vapor and 180 Smoke everywhere in the Toronto area.
Yeah, solid breakdown, Rob. So on to the last part of the segment with our SWOT analysis behind us. We have limited information on the listing. What could we ask to, decide if this is an opportunity we want to move on, Rob?
Yeah, all right, Eamonn. Buying a vape shop isn't like grabbing a pod off the shelf. Yeah, you got to dig in. Here's what I'd ask the broker to start with and evaluate based on some of that information. First off, financials, they're critical here for acquiring a business, the deal structure specifically. Can you share the 3 years financials, including revenue, cost of goods sold, and EBITDA and SDE trends? A 4 times multiple implies about a $500,000 SDE. Is that steady or a 1-year spike? And then in my opinion, after you clear the financials, competition and location. How many vape shops are within a 2-kilometer radius? What's the population density? Is it growing or declining? What's the demographic of that area itself? And the location, is it foot traffic? Is it a foot traffic magnet or is it losing steam?
Yeah, and I think above and beyond that, some specific ones to this type of business model, beyond the financials and the location, which are going to be important for pretty much any retail business, is the regulatory compliance. Regulations can change. But if the shop historically hasn't been able to keep up and has, regulatory infractions, if they haven't been compliant with Ontario's vaping laws, you could be diving in and taking on a little bit more risk than you may be otherwise comfortable with. So you'd want to ask about their regulatory history. And then, finally, and, maybe we could leave this one till after an offer, but I want to know about the customer base. What is the customer retention rate? Is it one-off tourists? Is it loyal locals? I want to see if this shop's got staying power depending, regardless of what happens in the neighborhood. So I think we've made an attempt to clear the fog on this $2 million deal, Rob. I got to ask you to wrap up. Are you making the next move and reaching out to the broker on this one?
Yeah, 4x SDE for a retail operation in an industry that could be zapped by regulators at any time, it seems a bit rich. I certainly want to know the location to evaluate if clients will be reliable enough to repay the investment in less than 3 years.
Yeah, this one probably you want to build in a little bit of flex room in your offer structure to recognize that things go up and down in the retail world. So well said, Rob. That's a wrap for this deal, Decode. Tune in next time when we tear into another opportunity. Until next time.
See ya.